Okay, so good evening, everyone. Welcome officially to our special project webinar tonight for the Duke Street project. I'm delighted tonight to be joined by, first of all, our resident Asher Weiner, who is the head of online sales and marketing here at LEOcrowdfunding. Good evening, Asher. How are you?
I'm all good. How are you doing?
Yeah, very well, thank you. And delighted to be joined by Tina Wenham from Target 5. How are you, Tina?
I'm good, thank you. Very good.
Excellent, excellent. Smiling as always. Whether it's early morning or late in the evening, you're always enthusiastic about your property business.
I once worked with someone that said, if you see someone without a smile, give them one of yours. So live my life by that.
Excellent, excellent philosophy. And also delighted to be joined by Rachelle Hillier from CSEE Investments. So good evening, Rachelle. Thank you for joining us.
Thank you for having me.
Brilliant. I look forward to getting in and hearing a bit about your backgrounds in a minute. So this is a project webinar that we run on behalf of LEOcrowdfunding. This is the Duke Street project that we're hearing about tonight. But just by way of introduction, it is important just to highlight that LEOcrowdfunding, we are an equity property crowdfunding platform. And it is important that we just highlight the nature of investing in property. So along the bottom of the screen there, it states LEOcrowdfunding Limited is an appointed representative of Sharon Limited, which is authorized and regulated by the Financial Conduct Authority. Pitches for investment are not offered to the public, and investments can only be made by registered investors on the basis of information provided by LEOcrowdfunding. So if you're on here tonight, we're going to point you in the direction of the information on our platform, which you then can read and decide if this is an investment that you would like to participate in. So tonight, our special project webinar is focused on 27 Duke Street. We as a team in LEOcrowdfunding are really excited by this one. It's the second project by the Target 5 developers, and it's always good to get a second project after a successful first one. And this is a commercial to refurb mixed use development in Brighton, and the plan is to do the refurb and then to sell. That's the original plan. The projected ROI of this project is 20%, and we'll go into that later on. Raise amount 169,000, and this location, which we'll talk about, is a short walk from the seaside, so you'll be able to see that in a few minutes. So that's the overview. But most importantly tonight, as we lead into our special guest speakers, is that we believe in education. We believe in sort of providing investors the opportunity to learn about property investment. I know that both Tina and Rachelle have a passion for education. And so I want you to, if you like, have in your mind in this journey, there's the opportunity to invest in this project with an educational stance in mind. So for as little as £100 minimum investment, you can go on this journey with Tina, Andy, and Rachelle, and you can learn all about this type of project. And so that is what's on offer with this project tonight. It's an educational project. So enough from me, over to our special guests. So if Tina and Rachelle want to take a minute or two and introduce yourselves, and then we'll get stuck into the project.
Thanks, David. I'm Tina. I'm one of the directors at Target 5 Property Developments. I've been in the property industry for over 20 years now. I'm going to have to update that soon because I think it's nearly 25 now. I am qualified in residential letting agents, ALA qualification level 3, president of the Brighton Hove Estate Agents Association in 2018. My background is in land, strategic land assessment for big PLC developers, taking it through the sales and marketing process and specification detail and then end users. And more recently, as part of Target 5, sourcing and developing high yielding HMO projects.
Go ahead, Rachelle.
Yeah. Hi everyone, I'm Rachelle. I am the director of CSEE Investments. I am a property investor and I also have a background in finance. I've worked within the accountancy sector for about 10 years or so, So that's both been in practice and also in property, doing block management, service charge accounting. And as well as this, I also do quite a lot of social media work, working with brands. I've got quite a large following on social media, which again, I like to sort of share all the stuff that I'm doing, my investing work, my property work, and educate people on investing and finance and property as well.
Okay, fantastic. So delighted to have you both here tonight. It's probably worth mentioning, Tina, that you have a business partner, Andy Babian. So you want to just maybe introduce him quickly, please?
Yeah, we better have, haven't we? So Andy is my business partner at Target 5 Property Consultants and Developing. He's actually on another webinar this evening for Property Investor Network, so he couldn't be with us, but he is ex-British Army officer. He's got a degree in risk management, masters in risk management, and has got a portfolio, I think is actually now worth about 12 million, but has completed in excess of 350 property developments in the 18 years he's been doing it. And I've known Andy probably for 10 to 12 years now, through property, originally doing some investments together and selling him some projects, and now we are business partners in a number of businesses, predominantly Target 5.
Excellent, thank you. I'll just highlight one aspect of Andy's background. He's certainly a very, very successful professional property expert. As part of his British Army officer background, as many of you know, I also spent time in the British Army Reserve, but Andy was actually in the bomb disposal section. So being an officer in the bomb disposal, I think it's fair to say he knows something about risk management. And that is what he specializes in when it comes to his property. So he does apply some of the principles that he would have applied to his role in places like Iraq and Afghanistan, in terms of risk management, risk mitigation. So I think that's an interesting mindset to have when it comes to doing property projects.
It's quite interesting, actually, when you listen to him talk about the risk around property and how some of those things that he applies. But yeah, so it is quite an interesting way of looking at things. Solutions. He always says in the army, if there's a bomb, you've got to find the solution. You can't always just think there's a problem. So it's
that's a good mindset. That's exactly a good mindset. And from an educational point of view, again, when we think of that for the webinar tonight, that is very often what you have to do. There's going to be problems at every project probably. It's what's the solution? How do you find the solution, and how creative can you be with the solution? So it's a really good point. Okay, so before we dive right into the presentation, I thought it was worth just Tina and Rachel explaining sort of why they chose HMO as a strategy, and then what it's like to work on JV. So again, just a reminder, if you have any questions, put it into the Q&A box, and then we'll be stopping mid-presentation, and Asher can ask those questions. Obviously, for time, we may not be able to answer every single question tonight. We can note the questions and send an email out to all the attendees with the answers. There's also an online forum that the questions can be asked on. So please put your questions in the Q&A, and we'll definitely be able to monitor those for you. I'll also say, if you want to select your viewing as the active speaker mode, if you want, and that way you'll only see the picture of who's speaking rather than having 4 of us on the screen if you're in gallery mode. So it might allow you to see more of the slide if you go to active speaker mode. So for Tina and Rachel, why HMOs, and why did you JV on this particular project?
In terms of HMOs, it's been part of our core strategy at Target 5 for some years now. And although we've sort of moved slightly away from one type of HMO, which is the student HMOs, and moved more into professional sharers, it still offers a very good high yielding return. It also allows us to maximise on permitted development rights, especially in mixed use, like in this project, where the upper floors and things can be converted without too much challenges around planning and things like that. And it's right for the area. And that's pretty much the number one thing, is that it's the right strategy for the local area, because there's a lot of professionals or sort of middle range incomes that need sharing accommodation, good quality sharing accommodation. I'll let Rachel take the why to JV, because she's my new JV. in this. So
yeah, I mean, I think this particular project just came up at a perfect time for both of us, and when we went to go and see it, we just felt like it would be a really good fit for us to work on together. But I mean, I think for me, being able to work with Target 5 on this, it's sort of a big education thing for me as well. So being able to learn and go along the process and that sort of thing. And I think when you do a JV, that's something really good. So particularly with this one, and I think for anyone else who gets involved, it's just going to be a really good opportunity to learn. So not necessarily just sort of connecting money with the developer and that sort of thing. There is kind of more to it. So yeah, the education part is definitely a big part of it for me. Why I really wanted to work with Target 5 on this particular project.
Brilliant. Okay, so there may be some questions on the JV as we go along. So okay, let's get straight into the actual project for tonight. I'm guessing, Tina, you're going to kick us off with the main highlights of the project and maybe how you sourced this project, perhaps a good starting point.
Yeah, I am so excited about this project. This has been on our radar at Target 5 for probably coming up for 8 months now. Probably took us 6 months to secure it. We saw it back last summer and immediately knew that there was an opportunity there. That this we sourced through our one of our local agent connections. This is an agent source one. It's right in the centre of Brighton, and it's mixed use. So again, taking advantage of some of the larger spaces upstairs in those mixed use premises that haven't yet been converted. We are going to be converting it into a co-living space, which, for those that don't know, which was a question on another webinar I did about this the other day, is professional sharing accommodation, but sort of uplifted. So providing more social spaces to work, really thinking about the design and how we're going to live, people are going to actually live there, providing nice accommodation for people. And we're hoping to return to the investors within 10 months. That is a well-considered timeframe, which I know we're going to talk about in a bit more detail later, for a projected return on your investment for 20%. So not too shabby, in my opinion, if you're looking for an investment. So yeah, we're really excited. I'm so pleased.
Excellent.
Yeah.
Yeah. Okay. No, that's very, very good. Good intro. So I think Rachel, you talking through then the location?
Yeah, so it's a really, really good central location. It's right in the centre of Brighton, just a few minutes walk from the sea, and the station is also just up the road from there. And yeah, as you can see from the pictures, it's right in the middle. So amongst all the shops, the restaurants, everything like that, it's probably the best sort of location you can find, really, in the centre of Brighton.
Okay. And I'm assuming in the summer this would be a very busy part of the city, particularly when people are at the beach and then wanting to sort of take a 5-minute walk into the centre for some shops or for some food.
Yes, definitely. Yeah, you've got the Ivy just around the corner from it as well. There's lots of really nice food places and shops literally just outside it.
I think it's worth pointing out, well, just slightly, that when we went there, and you might see on the video, we're going to show a video a bit later, I think, but it was a little bit odd for us because it was a bit quiet because they closed stuff for COVID. But it's one of those locations that will just be absolutely rammed on a hot summer's afternoon. All of the restaurants around there put their tables out in the street, and it's kind of, there's always like music and stuff going on. So it's a really bustly spot for Brighton, definitely.
Brilliant. Okay.
Hi everyone.
So we're going to show a video now. Asher, you can just confirm to me that this definitely plays okay. I know we've tested it, but we'll just make definitely sure.
Yeah, we will hear
and Rachel, do you want just to introduce the video? So when did you take the video, and what was the purpose of shooting this?
Yeah, so for this project, yeah, as Tina said, we're both really, really excited about it, and I just think it's going to be such a great transformation. So what I'm doing is I'm going to make videos sort of throughout the process. So this first one you're going to see is just seeing it exactly how it is before any work's been done or anything like that. And then throughout the project, I'm going to be doing various updates just so you can all get involved and just see how it's all going and everything.
Brilliant. Okay, so we're going to play it, and fingers crossed the technology works okay.
I hope you are doing well today. I'm quite excited for today's video. So I'm going to be taking you for a tour around my new development project. I'm going to meet Tina there, and then I think we've also got the site manager and the structural engineer coming along today. So yeah, that should be good. Just want to give you a little tour before all the work starts so you can sort of see it in its current condition. I really like these sort of videos because I like to watch the transformation as they go along. So yeah, hopefully it'll be something that you enjoy. It's not a very nice day. So here we are, right in the centre of town. I'll just flip and show you. Okay. So this is the building right here. It's actually 5 floors. It looks a bit smaller from the front. So we've got the commercial unit here, and then down this alleyway here is where we enter for the residential. And here, so it goes all the way back across down here. Have a look in a minute.
Looks like a really great space.
Those chimney breasts we're planning to take out, so you get a bit more room in those bedrooms. And then where that wardrobe is will be.
So in here between
One
these
of the
two rooms, we're going to have an ensuite for each bedroom.
Feel free to comment, Tina or Rachel. Feel free to make extra comments if you want.
We're not going to keep the nice pea green wall. And
then same again here, another 2 bedrooms, both ensuite.
One of the things we've had to get some advice on is fire, because it's only got that exit at the in the alleyway that Rachel pointed out at the beginning of the video. So we're getting a fire escape out of the back and also out of the lower ground floor, and there's going to be a sprinkler system and things like that we've had to put in. So well, we're going to be putting in.
It should be really nice in the summer. Really nice location, just in the centre of Brighton here.
How many stories was it again, Tina?
5. So
the
5 stories.
Underneath the basement, underneath the ground floor.
Bathroom or the 2 bedrooms at the top. And then down to the exciting bit. And this is the part which is our biggest challenge, which is the basement. So we need to actually put stairs here to make more space. It's a bit dark, really difficult to see.
I'm going to just fast forward slightly on that because that's kind of hard to see with the light, that people can watch the full video.
Yeah.
We'll just fast forward a bit and you can explain after the video what that bit was. Let's see if we can get.
We're going to get some lights down there for the next one because it's. wash hand basin,
Oh,
and then a
back to
little
slide.
kitchenette. And then in what is currently the dual-purpose kitchen/toilet,
We're on the ground
we're
floor.
going to actually separate that off and make a toilet, a proper toilet at the back, a wash hand basin, and then a little kitchenette at the front. And then this will be done pretty much first, so that we can get that on the market immediately,
Ready
get it
to go.
rented. That's the plan.
Perfect. It's quite a nice space.
When we secured this, there were tenants in this,
Yeah.
and it unfortunately they had to leave, but we renegotiated the asking price because there was no longer a tenant in it. So
Okay, very good. Rachel, could you just very briefly explain the video bit I fast forwarded was the basement? Do you want to just explain what the basement is going to be used for, please?
Yeah, so it's quite actually a big space down there. So that's going to be kind of the open plan living, dining, kitchen area. We're also going to put a bedroom at the back as well with an ensuite. And there's a bit of extra space down there, which is sort of storage and that kind of thing. But yeah, I think, and we're going to flip the stairs around as well. So I think that's probably going to be one of the best sort of transformation parts of this project actually down there.
Excellent. Okay, so people can access the video on the pitch pages. They should be up tomorrow, and they can watch the whole video then. Okay, so getting into the nitty gritty then of the timeline of financials. So Tina, you mentioned this is planned to be for 10 months. Obviously, property is property. You know, there's no guarantees. You know, capital is always at risk, and you can never put something in a brochure and be 100% confident it's going to happen because there's so many different factors. But all things being equal, you see this as a 10-month project.
yeah, so that's 10 months start to finish and being out and repaid. The project itself is, we're told, is a 4-month project. The lion's share of the work is going to be in that basement. As Rachel says, it's quite a lot to do down there, so that's going to take quite a big chunk of that. As you can see from the video, the upstairs is actually fairly formed. It just needs a little bit of tweaking. But yeah, so 4 months build program, then a bit of time for finishing off, filling it, getting it sold. That's the plan.
Yeah. So in terms of our thing on the screen here, it's like month one, the investors invest. You complete the purchase and all of that. You've then got 4 months to do the renovation and refurb. Then there's a couple of months to actually let the commercial unit, let the beds, spaces, get that all done, and then you have effectively an asset that's obviously generating revenue. Then you can sell. So that effectively 10 months, and that's I think a pretty realistic time frame for the type of project it is.
We do start the process of seeking investors for purchase prior to the end of a project. We've got some contacts that are international brokers specifically targeting the HMO investors market. So for example, on another one we've done recently, before it was even finished, we had an offer on it. So we're hoping that we're going to have a similar thing here, but obviously we like to leave enough time just in case there is anything we need to consider.
And it is fair to say that's a market that you and Andy are very experienced in, that you do source these type of projects for investors who are looking to sort of buy a finished unit that's already complete with the tenants. That is an area that you've got particular expertise in.
Yeah, definitely. I mean, we have a bank of ready-made, for want of a better way of putting it, HMO investors looking for high yield return investment. And we spread that net slightly further, as I say, with brokers and the like, and agents that deal in that specific market, because it is a specific market that you need to know about.
Okay, so behind the main team, Target 5, and obviously CSEE Investments, you've obviously got a team of people because you're doing multiple projects at once. So you want to just highlight sort of your additional members of the team that we have on the screen there?
Yeah, so Whaleback planning consultants are, as the name says, our planning consultants are preferred. We have them on a retained basis. We have a weekly 3-hour Zoom call with them to go through all of the projects in detail, challenges, issues, things we need to look at, and problem solve, the aforementioned problem solving. And they are what I consider them to be the best in the area, and we've dealt with other people as well. So we really do consider them to be very good at their craft. They're actually ex-Brighton and Hove planners, so they know what is going to be asked for. So that's a really good insight that we then gain through using them. And then BPM Architectural Services are our preferred architects. They're very used to dealing with conversions into HMO. They know all the legislations, space standards, size standards, how much square footage of kitchen you have to give per tenant, and all of these sorts of things. So they sort of allow us to look at the bigger picture, and they look at the minutiae detail of the architecture and making the spaces work for us. So again, we've used them for years, so really can't speak highly enough of both of those people, really.
Okay, excellent. Okay, so let's get on to the next bit then, and this is, I suppose, the key bit for the investors here on the call tonight. So we'll spend a few minutes on this and try and deal with any questions. So again, if any questions arise out of what we cover, you can fire into the Q&A. We're going to pause in a minute, and Asher can put the questions to Tina and to Rachel. So if I just sort of set the context here. So this is an equity investment. So just to be really clear on that for people who perhaps aren't that familiar with equity versus debt, in terms of crowdfunding, this is not a loan. The investors are not loaning money to T5 and to CSEE Investments. You're buying shares in the SPV that is buying this property. So that is the model, if you like, that we're using. So the idea on the left there, you can see that if the minimum investment in this project is £100, and that's the price of one share. So the concept here is that the investors will buy a share in the SPV for £100. That gets them one share, and then the SPV will buy that share back in 10 months or when the project's complete for £120. Thereby the projected net earnings of that share is £20. So it's a 20% projected return on investment from the price of the share. So hopefully that sort of makes it nice and clear. So effectively, because the raise amount is 169,000 at £100 a share, the SPV has issued 1,690 what we call C class or crowd shares. So they're a different class than what Tina and Andy and Rachel have as A class shares. So that's the investment side. Moving on to the right hand side, do you want Tina just to cover the highlight figures, the purchase price, the actual cost of the refurb, and then your net profit?
Yeah, so the purchase price is 705,000. Stamp duty and legals coming in at around about 23,400, something like that. 269 is the refurb, including professional fees and project management figure. And as you can see there, the GDV expected is 1.3 million. Also expecting 3 months worth of rental, net of any letting, management fees and bills, etc., giving us an income of 19,960. So total income from the project over the 10 months will be gross income will be 1.319960. Projected project costs, as we can see, are there. I'll let you, David. So I'm taking over your.
No. I prefer you doing it. No, I prefer you. You go ahead. It's your project.
Project costs, including any finance costs, interest, fees, fees for selling, or 1.144056, which leaves a gross profit of 175,904. Corporation tax still at 19%, thankfully. 33,422. So a net profit of 142,482. So the profit on the GDV is 13.5%. Profit against the project cost is 15.3, and then the crowd investment there below is 33,800 total, based on 169,000 raised.
Yep, absolutely. So again, I'll point out in a minute, there's a full breakdown of all these costs in the equity offer document. So you'll be able to access that and look at all the numbers behind the numbers that I often say. So just to highlight the bottom figure Tina mentioned there. So the crowd investment, we're raising 169,000. The 20% ROI on that 169 is the 33,800. And if you take that figure, 33,800 as a percentage of the net profit of 142,482, it's a 23.7% profit share. So that's the if you like the formula that's used. You're effectively, the investors are looking at a projected 23.7% profit share, but it's a priority share. So the investors receive their 33,800 back before any of the A-class shareholders can take any profit from the project. So it is important to highlight that. So literally the first 33,800 that comes in from the project as profit goes to the investors, and it's important to highlight that. So if there are any questions on numbers, by all means, fire it in the Q&A and we'll be able to deal with it in a few minutes, but I think that gives a pretty comprehensive overview of the main numbers. I mean, Tina, and indeed Rachel, for yourself, coming from an accountancy background, it's a pretty straightforward project. It's a property, it's bought, it's refurbed, it's sold, and all the normal attributing costs, go into the figures. So there's nothing really unusual in this project. It's pretty vanilla in that sense.
Yeah, I mean, I think in terms of, the first starting point for certainly for us at Target 5, and I think I speak also for Rachel, having spent some time working with her, is do the numbers work? And for us, that was sort of the base point of what we were looking at when we were looking at our selection process. And they do, and it's sort of hard to deny those numbers. And believe me, we try on a number of occasions to make sure we try and break it and see if we can make it break before we decide to do a project. But the only thing that perhaps isn't so vanilla about this project is that there is a slight planning element to it. And I think it's important that we mention that. We have got planning permission in to convert it from commercial space, which is technically what it is, to residential C4 sui generis HMO, but it will, under permitted development rights, it can be C3 anyway. So even if we don't get that, it can still be a holiday let under C3 planning. So it doesn't, we'd like to get that, but it doesn't mean that the project doesn't work without it, and that's what we looked at. So that's maybe the only slightly non-vanilla bit that's probably worked.
Okay. Yeah, okay, no, thanks for pointing that out. Okay, Rachel, I think you're covering the most important part when it comes to investors, and as you
the bit
tend
we're
to
all
wear
looking forward to.
exactly, and as Rachel comes this from the investor hat, Rachel, what's the exit strategy on this project, please?
Yeah, so the first one that we mentioned is to sell it, and as Tina said earlier, we'll probably be looking for a buyer before it's even complete. Hopefully we can do that and find that. If for any reason we can't sell it, the second option, we'll remortgage on it and keep it, rent it out until we can sell it. So yeah, they're the two options, the main plan and the backup one. And then if we were to refinance, us as the directors will make up any shortfall as well for the investors.
Mm-hmm. Okay, no, thank you for that. It's a very important part, because the market can change, and the refinance figures might look good now, but we just don't know what the market's going to do in 10 months time or 11 months time. So the fact that the directors are willing to effectively underwrite any shortfall between what's owed back to the investors in terms of what's achieved from a refinance, then that should give investors some comfort that the directors are willing to make up that difference to ensure that investors are exited after the projected 10 months. So number one, sell. Number two, refinance, and the directors will cover any shortfall of a refinance. Okay, conscious of time, Tina, so we'll just run through this quite bullet point if you can, please. But I think it is important for the investors to know some of your track record in this similar type of project. This is a raise that you did in our platform last year. we raised 142k for you. Do you want to just quickly explain this project, and then I'll show the finish as it is now?
Yep, this was a project, as David says, we raised 142,538 on the platform last October, I want to say, October, November-ish, fully raised, and we converted the upper floors to a HMO apartment, and the ground floor front space retained as a commercial unit, and then we finished it, and we are 50% let at the moment, and looking at refinance options, although we have had an offer to buy it. So that is a hot news as well. So we've got some decisions to make. It's a pretty good offer. So
okay.
Yeah.
No, that's good, and I'm sure the investors on that will be glad for the next update when they get that. But that gives an idea of the standard of finish that you normally would have for your HMO units, which is brilliant. There's also a case study that you can go on our platform and see a case study of Preston Street, another HMO in Brighton that was done. And we're going to move to the Q&A now. So Asher, time is obviously flying on here, but it is important to offer a couple of Q&A. I also see that my business partner and director, Aisha Forey, is in the audience. So I'm actually going to bring you up as well, just to make a comment on this project. So while Asher's doing Q&A, Aisha, I'll bring you up as a panelist. So go ahead, Asher. Do you have any questions, please?
So regarding the basement bedroom, it seems that you mentioned that it's next to the kitchen/communal area. Have you factored in additional soundproofing or other measures to give the basement tenant peace and quiet if needed?
So it's a little bit hard. On the offer document, there's some plans, so you can have a look at those and it will make more sense what I'm saying. We're flipping the staircase, so that bedroom will effectively be behind the staircase with a bathroom between the areas, which will be communal space. There's also some sort of storage space. So the basement is actually double width and goes under the alleyway that you saw on the video. And those spaces we're going to possibly utilize as some cool kind of funky work hub spaces for the tenants. So that also will add a barrier between the communal kind of dining-y social space and that bedroom. But of course, we will be meeting all required regulations around soundproofing, and also, as I said before, around fire. Basement spaces are notoriously hard to make sure that you meet those fire regulatory matters. So we've had to spend quite a lot of time thinking about that with the project manager and the designer.
Mm-hmm. Cool. Also, who's doing the senior debt, and are they happy with that profit on a GDV level?
Yes, we've got a couple of offers for senior debt, although we're sort of buying it in a structured way. And yes, absolutely, they're happy with those profit levels. All of the project details have been shared with the senior debt lender, and the details of the senior debt lender are on the offer document. Mm-hmm. So yeah.
Cool. And if you sell West buildings, do investors get paid out early, and at what ROI? I
won't go into ROI on this webinar because we'll give an update on that when we know what those, because at the moment I don't know what the figures are going to be, but of course the investors will be paid out early.
Couple. I think that is pretty much the lot.
Okay. So yeah, if there are any more at the very end, we'll like just for a couple of minutes. Yeah, I'm just getting a message back and forth from Aisha here, so she might be able to join us just in a few minutes. So by way of wrapping up the main presentation, then there's another 5 minutes about how you actually register and how you can invest. But just to highlight what's on the screen there now is you can go to our homepage and you'll be able to see the Duke Street thumbnail. And then once you click on that, you'll be able to read all about the project. There'll be a number of like sub drop-down boxes, an overview, financials, the team, and then there's this box in the middle. You can see there, register your interest. So it's very important for those who are on the webinar tonight, if you have an interest in this project and you feel it might be something you want to invest in, if you can leave your email address and the amount you're considering investing, that lets us prepare better for our going live on Thursday. So the project goes live at 12 noon on Thursday, but there's a process of registration. So it allows us to see where people are in the registration process and contact you and help you through that process. So it is very, very important. If you are thinking, that this is something you may want to invest in, obviously you'll look at all the information after tonight, make your decision, but leave your email address, give us the amount you're considering investing, and we'll be able then to support you as we move forward to actually do the actual investment. So you can access that from there. So
we've got a couple more questions in.
Yep, so go ahead, fire them in now.
So firstly, can an investor contribute via a limited company vehicle?
Yes,
I believe so. Yeah.
Yeah, I'll answer that one. So absolutely, that's actually going to be part of the registration process. So I'll not mention that now, as I'll mention in a few minutes.
Cool. And does the forecast rental income include the commercial unit? If not, what rent do you anticipate this achieving?
It does include the commercial unit, but we're anticipating that to be at circa £35,000 a year. That's the going rate for that location. In fact, it's a little bit below going rate because we wanted to be a bit cautious because of current climate.
Excellent. Okay, what I want to do is Aisha's managed to join us, so I spotted Aisha there in the attendees. So thank you, Aisha. Aisha's the a director in LEOcrowdfunding. She's other business interests as well in the world of property, very well known, high profile speaker. And thanks, Aisha, for being able to jump on quickly. And I'll let you give your thoughts on this project. And I know you were doing some events with Tina, I think, over the weekend. So
yes,
over to you.
Thank you, David. I've got two hats on at the moment. I'm currently mummying and doing this. So if you hear any background noise, please excuse it. No, just wanted to say, welcome to everybody. I know we've got quite a lot of Propel women on tonight as well. So this was just a follow up from the presentation that we did with Tina on Saturday, but this was a lot more in depth. You got more information on the actual project and the figures. And just wanted to say, particularly for the Propel women, if you do have any further questions, or anything that you feel that hasn't been covered, but I think the presentation has been fantastic. So well done to Tina and to Rachel, but please do let us know. I think the one thing we should mention, David, is that in the past we've had some investments that have gone live, on the day at 12 o'clock, and then we've had some people sort of, contacting us a few hours later saying, well, what happened? I want to invest and it's all gone. So I always say to people, if you are interested, please make sure you do get investor ready and go through that process that you need to, ideally before the day. That's all from me. Thanks, everybody.
Thank you, Aisha. That's thanks for the interjection there, and a really good point about that. So we have had some deals have taken 30 days to fund. Others have been funded in literally the first day. We had one funded similar to this sort of size-wise, funded in 2 hours. Again, if this is something you're thinking that you might be interested in, register your interest, and that way we can communicate with you, answer your questions. So that 12 o'clock noon, if you so wish, then you can press the button. So that's a really good point that Aisha's made. Okay, so just to wrap up in the last sort of 5 minutes, and this is really important, particularly for those who haven't yet registered on the site. And I will just change the screen view to there, if I can. Okay, so let me run through quickly registering on the actual site. So when you go to our homepage, top right hand side, you'll see login and register. And the first thing that'll happen is you'll leave just some basic information, some name and email address, password. You'll have a confirmation email that's then required, and then once you've done that, you'll receive an email obviously allowing you to access, and then you move into what we call the KYC process. So don't get confused by registration and investor ready. So when you do your initial confirmation email, then you're registered in that sense, but you cannot actually invest until you're investor ready. So what does investor ready mean? Well, it means, first of all, you have to do an appropriateness test. So let me explain what that is. Now, this is a requirement, a regulatory requirement that really is you, the investor, confirming that you understand what this type of investment is. So as with all investment, capital is at risk. There's no returns guaranteed. So there's a series of questions. They're multiple choice. And if you keep in mind, the fundamentals of investment, then you'll be able to answer these questions straightforward. Now, you only get 3 goes at this. If you don't pass it on the 3rd time, then you have to wait for about a week before you can take it again. So the biggest mistake people make is they rush through it. They don't take time just to read and think about the questions. If you go to our risk warning and our T's and C's, if you read through those, then there'll be no problems understanding the questions been asked. So just to make sure people understand, you do have to pass this before you actually are allowed to register. You then have to designate whether you are a retail restricted investor or a high net worth investor or a sophisticated investor. Again, that is very important in terms of regulatory issues that we must adhere to, and of course compliance. So you need to tick the one that's there. And then you can designate whether you want to register as an individual or as a limited company. And if you've registered as a limited company, we've got a nice step-by-step guide. There's a bit more information required in terms of your company, your registration, article association, beneficial owner statement, all that sort of stuff needs to be supplied. And if you're an individual, then it's normal KYC and AML. So your AML is normal proof of address, pretty standard for this type of stuff. So when you've completed that process, you've passed your test, KYC, AML, you then will receive an email clearly right in front of you. You have successfully completed the investor readiness assessment. That means that you're now ready to invest. So if you haven't received that, then just make sure that you've done everything you need to do. And if you have any problems, then you can contact us. No issues at all. And the staff will help you go through that. So then if you then wish to invest, so you'll click on the thumbnail, you'll then access what we call the pitch pages. And you can see there's a full overview of the team, the financials. You can download the full offer document. So on the right-hand side of the screen is the full offer document, where Tina and Rachel have broken down, the full details of the project. A lot more information on the finances and the appendix. Again, all the support documents of the senior debt and of the planning. All the aspects are all there in the document. So that's the key document to look at. There's also a form where you can leave any questions, and Tina and Rachel can answer your questions on the form. So if you then have a look at that and think, yep, I want to invest, then you can move to make an investment. Again, £100 is the minimum on this one. You simply insert your £100. It will tell you you're going to get 1 share for that. And then you move to the payment transfer. Now, there's 2 ways of paying. You can transfer money to an e-wallet, and then it's in your own e-wallet on the platform. And it's there then ready to be deployed when you agree the shareholder agreement. Or you can choose bank transfer. You're then given a unique reference number, and then you can, at the time of your choosing, transfer the funds into your account via a bank transfer. So that's the 2 ways of doing it. Some people prefer to get the money into the e-wallet straight away. Others prefer to wait and do a bank transfer. It's entirely up to yourself, but you're better getting the money obviously onto the platform so it's ready for deployment. However, no money goes to the SPV of the project until you, the investor, accept the shareholder agreement. So that's the key legal document. You're becoming a shareholder with Tina and with Rachel and Andy, and you're investing in their business. So you have a chance to read the shareholder agreement, accept it, and that's the trigger, if you like, for funds then moving to the SPV. So that should be pretty straightforward. If you have any questions on that, we're going to give you an email in a minute that you can go back to. But just to wrap up on the summary, we're at 50 minutes, which is just about nice. So just finishing off, is there any more questions, Asher, before I go to Tina and Rachel for a wrap up?
Yeah, there are actually a couple of small questions for Tina and Rachel. Would the same investors earmarked for the residential also be buying the commercial as well?
So they are, the people we tend to target with these projects are HMO or yield returning investors, I guess is the way I'd like to call them now. So they look at what the overall yield is of the building and buy the freehold, which yes, includes the commercial. So it'll be one buyer.
Cool. And we have a question here as well from Nicole, who is a property newbie, being quite honest and open about that. So thank you very much. And also there is no basic questions here, by the way. What does it mean to say that the directors will assume any shortfall? So she's basically asking, saying that she thought this was an equity type investment. So if she were to invest £200 and the project doesn't materialize, she feels like that's risk that she would be taking on.
So that is specific to exit 2. So if we refinance, then we as the directors will be holding that business, but to essentially pay off your shares and give you your return, we will therefore make up any shortfall to enable us to do that. So that's basically where there's the slight difference, but I'm sure if you have any further questions on that, we can maybe delve into a bit more detail if you do at some point.
Yeah, we can follow up. Okay,
And
any more, Asher?
one last one.
Okay.
Can you explain the risks around the C-class shares, and should the SPV need to liquidate / dissolve?
Okay, that's probably better for me to take that
Yeah.
one. I'm guessing, Tina. Yeah, Tina had a nice outtake of breath there. So yeah, so yeah. No, it's pretty straightforward. And again, we can maybe get into this by an email answer on the forums, because I know we're conscious of time here, but the pretty standard for an SPV, there'll be A-class shares, which are the principals, the SPV owners, which are Andy, Tina, and Rachel. And obviously they have the voting rights, they have control of the project. It's their project effectively. The C-class shares then are the passive investors. So obviously they don't have voting rights, but they have a share class, which obviously is laid out very clearly in the shareholder agreement as to what they get for their shares. And that shareholder agreement discusses the different options of exit. So if exit 1 happens, it'll explain how the percentage is calculated. If it then becomes the refinance option, again, that will lay out clearly the steps that have to be taken by Tina, Andy, and Rachel in terms of the refinance and the cost of that, etc. And again, the formula is there in terms of the return that's due to the investors. So it's literally a pretty standard A-class and C-class shares. I'm happy to go into that in more detail offline if we need to, but hopefully that answers the question. So okay, so just to finish off, I'll give Tina and Rachel 30 seconds each, and then we can wrap up.
Just that we're really excited about this, and the project's happening. We've exchanged contracts and we're completing in a couple of weeks, so it will be happening. We just really want to bring some people along for the ride, really, and it'll be a really good one to watch, and it's going to be quite a transformation, so it'll be exciting to be part of.
Yeah, again, as Tina said, I'm really excited about this, and if you follow me on social media, on YouTube, I will be doing regular updates, regular videos to share it all and show you all the transformation as we go along.
Well, I think Ash and I are looking forward to the sort of in the flesh site visit sometime in July when the sun's out. And after we'll get an ice cream. Well, I was also thinking of walk along the beach with an ice cream, maybe. Asher, what do you think?
Yeah, I was going to say we will conveniently be coming during the week of when it's likely going to be hotter than usual. Yeah, for sure.
Absolutely. Okay, so wrapping up, can I thank Tina and Rachel for being here tonight, giving up of their time sort of outside hours to speak to the investors. Thanks, Asher, for hosting all the questions. Thanks to all the audience. If you have any questions, get in touch with us. Happy to answer any questions. You can see that Tina and Rachel are more than willing to spend time engaging with investors. So just remember, register your interest if you do want to invest in this project. Download the equity offer document, read it, make sure you're happy with all the information. And then the project goes live this Thursday at 12 noon. We do our weekly broadcast from 10 to 10:30. I'll maybe see if Tina and Rachel, if they can spare 5 minutes on Thursday between 10 and 10:30, maybe let them jump on a few hours before going live, which would be a nice way lead into going live. So just so everyone knows, 12 o'clock, if you want to invest, then you can get ready and you can press the button at 12 o'clock. So there is an email address there somewhere along the bottom. No, there isn't. Support at LEOcrowdfunding.com. Support at LEOcrowdfunding.com. In fact, you'll get it on there as well. You get my email address there if you want. So any questions, grab a quick screenshot there. And that is us for tonight. So thank everyone for joining. Trust you stay safe. We'll let Tina go on and finish off that nice glass this has been sipping at there for the last few minutes. And it's almost empty.
It was full at the beginning.
Very good, very good. Well, listen, thanks everyone for joining us. I hope you find that useful, and we look forward to being in touch with you and talk to you all soon.
Thank you.
All the best, everyone. Bye-bye.
Bye.
Bye.